Welcome to our new episode of our massive 100-part video series on Excel Analytics. To learn data analytics, whether beginner or experienced user, you will love to know more about Excel Analytics with AI. This video is for you. Enjoy watching.
Hello everyone and welcome to our Excel AI Analytics series. While we have previously mastered the standard interest tracking, today we are exploring a more specialized tool in the Analyst toolkit, the ISPMT function. To a layman, the ISPMT is the straight line interest tracker. While most consumer loans utilize a declining balance where your total payment stays fixed, many commercial loans and investment structure follow a different convention. ISPMT calculates interest based on a linear repayment schedule. By assigning a specific period to your loan, Excel uses this mathematical convention to isolate interest costs, assuming the principal is retired in equal installments over the life of the asset. Imagine a business borrows $12,000 for 1 year at a 10% interest rate in the specific agreement. The bank requires an equal principal repayment of exactly $1,000 per month plus interest. Currently, ISPMT is a zero-based index. To calculate interest for month 1, we enter period 0 in this scenario. And your month 1 interest is exactly $100. Calculated on the full $12,000 balance. By month 12, which we enter as period 11, you have retired most of the debt, leaving an interest cost of just $8.33. Truly understand ISPMT, look at the anatomy of the loan. Unlike the standard mortgage where the total payment is fixed, in an ISPMT model, the principal repayment is constant because we are retiring the debt in equal blocks. The interest expense doesn't just decline, it drops in a perfect straight line, decreasing by exactly $8.33 every single month. This linear decline is the hallmark of the ISPMT convention. When you utilize ISPMT, you are ensuring your reporting is 100% accurate in the specific terms of your contract. For the modern day analyst, precision is the foundation of trust. Using the correct convention provides a defensible financial statement and a robust forecast every time. Thank you for watching. In our next session, we'll dive deeper into the advanced AI-driven financial modeling. Don't forget to like and subscribe to stay ahead of the curve.